Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Certainly the earnings season in the US has been pretty good. On the whole, most of the companies have been sort of beating their sort of estimates, and that's sort of helping to sort of bring down the PE ratios. Because while stock price has been trading pretty high, really it's all been on the sort of premise that hopefully earnings will start to catch up. And now with the sort of increase and sort of beat on the earnings, that's helping to bring down these PE ratios. So with the Dow comfortably trading around that sort of 34,000. The outlook for equity still looks pretty good. You've still got a low interest rate environment. You've got authorities and administrations that are looking to do everything they can to keep the economy, let's say, not just going, but more on a recovery now rather than a rescue. You've still got potentially Biden's infrastructure program as well. That certainly runs into the trillions of dollars. Even talking a bit of a tweak to the sort of tax system in terms of capital gains didn't really do too much to sort of stop the upward momentum. Now, early days as well, but Powell's term is coming up for renewal in early 2022, and it's already looking like a pretty strong favourite to have a second term as a Fed chair. Now, obviously, the improved outlook for the US economy is really all dependent on the fact that they get COVID under control. Vaccines are certainly going pretty well, getting close to getting half the population vaccinated now. And certainly if those vaccinations can then ramp up over the summer period, as we head into the sort of winter time, they've really got at least sort of 80% of the population vaccinated. Because obviously the real worries could be that you have a second and a third wave in the US. You've only got to look at India that is really in crisis mode at present, running at around just over 300,000 new cases a day. Health system is close to breaking down. The country is really just swamped with COVID. Oil still holding around 63 bucks a barrel, and just be very interesting to see now as we do head into those sort of summer months. Potentially a lot of traveling in the US, really by car more than anything else. UK doing pretty well on the vaccines as well. Now close to half the population vaccinated, and really some pretty big milestones being reached now in the UK. One of the sporting events of the weekend actually managed to have a limited number of fans inside the stadium. Now that's obviously a big step forward when you look at what has happened to the UK over the last sort of 12 months. It's really been pretty dire. And as the UK does emerge from its sort of COVID lockdown, some really pretty optimistic numbers being put forward now for growth over the next sort of 12 months. Now you compare that with Europe, Germany going back into a sort of partial lockdown and, really sort of struggling with that sort of second and third wave. Closer to home, and Australia is still sort of coping pretty well. Trans-Tasman bubble is now fully up, or will be fully up and running from midday today. Perth had a minor, sort of minor lockdown, sort of 3 days after a COVID outbreak in the community. And seems to be now sort of freedom of travel in Australia, and really have done a pretty good job of keeping the virus under control. Borders are still closed to everyone except New Zealand. Now here in New Zealand, still no sort of firm timeline yet for the sort of vaccine rollouts. Though interesting, there's a sort of quite high TV ad campaign, sort of educating people on the vaccine, because really the government really wants to get as many people vaccinated as possible. But in terms of the economy, it's still pushing along at a pretty good rate. Obviously buoyed by the housing market, that really hasn't showed very little signs of sort of stopping. You've still got record low interest rates, you've still got limited supply, and you've got increased demand. Also time to be maybe looking at that KiwiSaver as well, coming up to 30th of June, just to make sure you can get that maximum tax credit. You have to put in that $1,042.84. And if you do get the maximum tax credit, just worthwhile checking your balance and making sure that you have contributed that much. And if you haven't and you are able to top it up, then it's obviously worthwhile. So certainly in this low interest rate environment, it is pretty tough out there. So if you are looking for income, there's plenty of alternatives available. And go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.